What's up, fam? It's your boy Craig, and man, I'm here to give you week 12's update on the 2021 Savers Challenge, where I'm going from 0 to 15K in 2021. If you're joining me on this journey for the first time, man, look, I started this Savers Challenge just to show you that you can go in the stock market and get a better return than you could ever get in a savings account, where you just throw your money in there and you do a lot of hoping and a lot of praying and hoping that you can come out financially stable and set to retire in this time and age that we live in today, man. So if you like this type of content, I'm gonna need for you to go ahead and hit that like button, definitely subscribe to the channel, and go ahead and hit that notification bell so you can be notified every time I drop hot content like this. Now, I wanna go ahead and talk about what's the market performance that we saw this week. I wanna go ahead and get that recapped so we can get directly into my portfolio. Now, let's start with the Dow Jones. We saw that the Dow Jones was down up 1.3%, excuse me. And then we seen that the S&P 500 was up again as well as 1.5% on the week. And then we see that the NASDAQ closed out down 0.5% this week. Now, tech has been taking a beating, and tech has been feeling that burn for the last couple weeks, and it started with the Treasury yield rates, and now we're looking at how investors are swinging their money directly from the tech stocks into the recovery plays. And now there's even the rumor of the corporate tax rate may be going up from 21% to 25% with the president Biden's new infrastructure bill. Now, if you like these charts that I just popped up on the screen for you, and you considering that you might need to be on those charts too, man, look, you need to use my link down below so you can get 2 free stocks with Webull when you deposit $100. Find that link down below, and let's talk about my public account, and let's get into the overall balance. All right, so the overall balance of my portfolio is down currently over 2%. That equates to $96.62. I'm going to take that. I'm going to be okay with that because of what we've seen in this market the last couple of weeks. Now, I want to talk about the individual stocks in my portfolio's performance so that way you can see that I'm being very transparent with you all. Now, let's start with Immersion Corporation. I'm currently still sitting on 11 shares when it comes to Immersion Corporation, and I'm down over 11% in this stock. They provide haptic technologies in various industries, and they have an exclusive deal with Sony where they actually are into the dual shock controller for the PlayStation 5. So if you want to know more about Immersion Corporation, I'll leave a link above for where you can actually check out that video from, and I'll leave a link down below as well. So go ahead and check that video out, man, because you'll get a lot of good information out of it. But the next stock up on the list, though, is Zomedica Corp. And this stock, I'm still sitting on 320 shares currently, and I'm down over 21% on this stock. Now, if it continues to dip, this is what I consider myself I'm gonna have to do. Keep buying more. I see a lot of investors, and I hear a lot of content creators out there talking about the rinse and repeat method when it comes to this stock. See, when I see a stock that's going to have massive growth, I continue to buy. I don't play for the short term. I play for the long term. And I'd rather be adding to a position versus taking away from a position and hoping I can jump back in at a lower price point. So when that bounce back comes back, because I kept adding to this stock, I'm going to see significant more gain in the performance of that portfolio and that stock when it comes to me. So instead of having to jump back in and try to run it back up and catch a new wave, I will just go ahead and do it that way. Now, what I'm saying to you is that I do understand why people use the rinse and repeat method. And it's nothing that's saying that you can't use it. And I understand why you would. But when you have a better play than like Zomedica, then that's fine. But when you don't, and you just got your money jumping around, bouncing around, you're paying taxes on that money, and you're not growing your wealth, because your wealth is not equated to what you're actually paying the government. It's what you actually keep into yourself, and you don't have to pay it out. So that's a certain way I'm going to play my plays, and I'm not going to be jumping in and out of this stock because I have conviction in this stock. And like I tell you every week, when you have conviction in the play, you keep buying more when it goes down. My next stock is Airbnb. And man, Airbnb is only up 2% this week on my portfolio performance. And I still have 21 shares, and you know it's the biggest holding in the stock portfolio that I have in the public account. But what I'm thinking about now, man, with all these valuations coming in, I may have to pump the brakes on adding to Airbnb right now in the public account, because I see a lot of valuations out there that are looking enticing, and they're getting much smaller, and they're becoming very reasonable value plays for the performance of this portfolio. Now, I'll probably be releasing my new fundamental analysis on Airbnb this weekend, no later than Monday. And man, I don't want you to miss out on that video. So what I need for you to do is hit that notification bell so you can be notified for when that content drops. Because man, you're going to want to know what the new sharp price points are for, and my new price targets going into 2022 for this stock. So, hey man, you got to check it out, and you got to be willing to do it. Now, what do I expect to see in the market going forward? I expect that people like you who are joining me on this journey from 0 to 15K, or even all the way up to 30K, or maybe just 5K, that you got to understand that you got to start considering taking advantage of the market when it gives you the run up to rebalance your portfolio into better performing stocks. I know we like to get into the penny stocks. I know that we like to make sure that we're getting ourselves enough exposure to where we can get the risk reward value back. But right now, where we're at in this market, you want to be in value plays, and there's a lot of things that's cheap out there that you can take advantage of. And I have other videos on the channel that'll show you what are actually cheap value stocks right now and the performance of what we're seeing in the market. So you got to consider your risk. I want you to understand, I never want you to sell on red. I never want you to take a loss on any performance of the stock market that you have. But you need to be looking at getting into more growth-centric stocks, and you need to be looking at stocks that's going to provide you a better profit in the long run and a better return on your investment. Because the most important thing about being an investor in the stock market is basically making sure that you're taking care of yourself so you can never feel the pain of the market when it's time to look back on these times in the market. Let's talk about, do I expect to see the pain in the market that everyone keeps talking about and speculating on? It's been a hell of a ride in the market when it has been in the last year. But now we're looking at this inflation talk, and now we have another catalyst maybe on this inflation talk, and that's the Suez Canal shipping container stuck. Right? That shipping vessel being stuck in the Suez Canal can actually impact the market in a lot of ways. And it's going to impact a lot of companies that you do actually invest in, because that Suez Canal connects the Red Sea with the Mediterranean Sea, and it divides Africa from Asia. And it's the shortest route versus having to go around the Horn of Africa. And a lot of major companies need those shipping containers to be going through that Suez Canal, where more than over 200 and maybe 2,000 vessels go through there a day. And look, the longer that ship is stuck, it means that the more shipping vessels behind it can't get through, and they have to consider an alternative to actually traveling to get their deliveries to where they need to go on time, which all of them are already delayed by each day that shipping container does not move. Now, from my experience of being in the Navy, if I had to add on another couple days to my travel to go around the Horn of Africa versus where I'm at near the Suez Canal, you're talking about, depends on where you're going in the country, about another month delay on deliveries. And that's just news that the market is not going to accept, and it's going to impact the market. So please expect more volatility to come up in the next coming weeks as we listen to how long this is going to take. People speculate it's going to take a week, it's going to take a weekend, or it's going to take a little bit more than a week to get this ship moved. And if it does, man, that's going to impact the market. Now, let's talk about how I see the spring approaching most of the country. And we got these stimulus checks booming in the economy, which is going to lead to opportunity to rebalance your portfolio a little bit here when you see a nice run up because of all the spending and the velocity of money in the economy due to these stimulus checks. So anything that you're net positive in, that you don't have a true conviction in, this is your chance to rebalance your portfolio, family. Look, I understand that a lot of people have been thinking about this 10-year treasury yield was going to affect the market for a long time, but I've been telling you that the disconnect was so soon going to happen where people was going to stop being paper-handed in the market, and they was going to decide that they need to go ahead and just buy what they're going to buy and let the year do what it's going to do. And that's what we're seeing. But now we still have pain in the market though in certain sectors, but a lot of stocks are starting to run again, and you got to be willing to understand what your next position is. This is what I'm saying. Take advantage of the bloody days, because we're going to see a little bit more of these bloody days in the short term. And you got to make sure that you're feeling that pain enough to where you want to buy more. So I want you to understand that the worst is still yet to come when it comes to the GDP heading into Memorial Day, as we're looking at what's going on with the travel that's going to happen in the economy, that you got to look at the fuel prices that's going to be higher in the economy, and you definitely got to understand that the food prices are going to be impacted about what's going on in the Suez Canal at this point in time. So keep all this on your radar as you find more buying opportunities in the market, because this is what it's going to give you, in my opinion. Let's jump into what's the word of the day. Today's word of the day is balance sheet. Balance sheet is what's going to provide you a financial health snapshot of a business. In this case, we're talking about companies that you own stock in. See, the balance sheet is going to tell you what the assets, the liabilities, and how much equity that is within that company. See, this is what I want you to remember when it comes to a balance sheet, that you need to understand that the formula for calculating what is going on with the assets in that balance sheet is liabilities plus shareholders' equity. See, I'm gonna bring you more nuggets like this, and I wanna make a focus on you and myself getting better as investors each time I drop high content like this. So stay tuned for more word of the day and more leverage of what's going on and expanding your mind. See, remember, reach one and teach one. That's how I go about this every day, man. If I'm providing you any type of value in this video, consider sharing this with others. Man, I also check out another one of my videos that I left for you. And until next time, I'll catch y'all into the next one. Peace.